Very good morning, guys. Yesterday, the number everyone was watching finally gave way 24,000. Four times this market had run at it, and four times it had gone thrown back. On the fifth try, Nifty pushed to 24,002, and for the first time, it did not run away. It closed on the number at 23,989 at last. But park that win for a second, because the real action is the next two sunrises. Tonight, after we have gone home, the United States Federal Reserve sets the interest rates, and tomorrow the Sensex Expiry is there. So today is not the main event. Today is the setup that is going to happen for tomorrow. The quiet board you arrange your pieces on before the storm begins. This is the Tanmay Edge. You are listening to episode 62. I am Tanmay Gurtakoti. Let's go. Let's start with yesterday's tape, because it is the board for Sensex Expiry that is happening tomorrow. The Sensex closed at 76,808, up 544 points, and the leadership flipped hard. The IT pack, dead last on Monday, was suddenly the first. HCL Tech was up 3.6%, dragging the index up alongside the heavyweight financials and Reliance. Nifty rode the same wave, 23,989, up 135 points, 30 stocks up and 20 down, powered by Wall Street's Monday surge, finally washing onto our screens. Now let's read the expiry board it left behind. So here is the Sensex Expiry picture, that is, we are going to see a pinning setup tomorrow. The market is sitting at 76,808, and the option writers have drawn a clean box around it. Below us, the put writers, the people betting we hold, have stacked their heaviest support at 76,500. That is the support zone, the single biggest block on the board, and they piled almost 9.5 lakh fresh contracts onto it yesterday alone. That is the floor with conviction. Above us, the call writers, the people betting we stall or we don't go higher than that, is standing at 77,000 and 77,500. So the expiry box is 76,500 on the support side, 77,000 on the upside. The put call ratio for the whole Sensex chain stands at 1.44, and that is a bullish tilt. More put writers than the call writers mean the bigger money is betting on the support, not the breakdown to happen. Now the two numbers that matters most for tomorrow's expiry. The ATM straddle on Sensex, the market's own price tag for the move, is about 645 points. Lay that on the close, and the straddle's implied band runs roughly 76,100 on the downside to 77,500 on the upside. That is where the option market expects this settlement to happen. Run the one standard deviation math on the volatility, and you get almost identical envelope, above 660 points either side. Two different methods, same answer, and the arrangement is that gives the level the confidence. And inside that band sits the switch, the gamma flip level, near 76,850. That is the level you have to watch for, just above where we closed. Below that line, the big desk amplify every move. A push lower feeds on itself. So any drop below 76,850 should be a trending move, and the move should take a support around 76,500 with a fresh conviction of around 77,000 on the upside. So now the Nifty, quickly, because it sets the tone even without an expiry. On the next weekly, both walls sit on one brick, 24,000. The heaviest call return and the heaviest put return in the whole market piled on the same strike. 6.5 crores of 65 lakhs of calls and 54 lakh of puts. When one number is both the biggest resistance and the biggest support, the desk expects it to behave like a magnet. The PCR is at 1.03, almost neutral. The straddle is about 326, a band of 23,666 on the downside to 24,300 on the upside, and the gamma flip level sits at 24,000. So exactly where we are opening. So both our indices are balanced on their hinges into the Fed night. That is not a coincidence. That is a market holding its breath. The positioning underneath says the trend is still up. We are still on buy on dips mode. The foreign desks bought a second straight day in cash, another 384 crore after 2 full weeks as the only seller in the building. But here is the part most people would miss. In the futures, the same desk is roughly short 2.3 lakh index contracts. They are buying shares and still holding big short. The cover is real, but it is unfinished. An unfinished short underneath a market is exactly the fuel that powers the next leg if these walls give away. The domestic funds sold 1,152 crore and the retail crowd is sitting net long. The overnight tape is the complication. The same Wall Street that lifted us turned around while we slept. The Nasdaq fell 1.15%. The S&P slipped 0.5%, both rolling ahead tonight's Fed move. So the IT pack did all the heavy lifting yesterday, is staring at a red overnight, and that is your first tell at the open. Everything else is friendly. Brent crude has slid to $79, the lowest in weeks, and gift for an oil importer like us. The rupee is firm at 94.56 and gift Nifty points to a flat open right now at 24,009, sitting on that round number. So the sectors to watch today are clear. First IT, yesterday's leader, and tonight's question mark with the Nasdaq red overnight. If our IT names hand back gains, the whole index loses its engine. So watch HCL Tech and TCS in the first hour. Second, the financials, because those are the leaders. Bajaj Twins and the private banks, they are the real weights in both indices and they need to hold on any push higher. Third, on the weak side is the sectors which have rallied already. Auto, metals and PSU banks that lagged yesterday might turn around. Maruti, Tata Steel and State Bank all were in red. So that is where the leak shows up first in the tape rollovers. So here is the plan, and today is the patient and small because the events are not today. On the Sensex, the expiry box is 76,500 to 77,000 and the hinge is 76,850, that is the gamma flip. While we hold above 76,500, the bias is up into the expiry and a clean move over 76,900 opens doors to 77,500 as well. Lose 76,500 the floor with all the fresh put writing and the support breaks towards that 76,100 to 76,200 mark. On Nifty, do not chase 24,000. We are right on the flip where the tape whips both ways. Instead, buy the dip into 23,900 down towards 23,800 while it holds. Take something off into 24,100 to 24,150 because after that we would directly see 24,500 and the long idea is wrong only below 23,650. Till then we hold buy on dip strategy and the size everything down because there is a Fed at midnight and a Sensex expiry at sunrise. The simpler trade is really a warning about volatility. India VIX has collapsed almost 7% yesterday and is trading around 13.36, and a cheap premium on Fed day looks like a free lunch. It is not. It is cheap because the move everyone is waiting for happens tonight after the bell. When you cannot trade, do not sell naked premium into a central bank and do not buy the breakout before the event that decides it. Let tonight happen first, then trade tomorrow's expiry with the answer in hand. The honest risk is the Fed and the IT pack. If Wall Street overnight rollover carries into our session and IT stalls, 24,000 caps and 24,100 becomes the first resistance. A market balanced on two pivots into one big night. Respect it. So Wednesday in one breath, guys. So Nifty finally closed on 24,000 instead of running from it. The foreign buyer is back but still short underneath and both indices are coiled on their gamma flip levels. Fed tonight tells the tail for tomorrow's expiry. The Sensex box is clear 76,500 to 77,500. Hinge is at 76,850. For Nifty, it is 24,000 with support around 23,900. So one last thing, guys, episode 61, that is yesterday, graded almost 4.5 out of 5. One of the cleanest read. Full scorecard is available on rupeecase.com. If this helped you read the tape more clearly, share it with one trader friend who needs it right now. Hit that subscribe button so you never miss a morning podcast. Stream the full episode free and first on rupeecase.com and on Apple, on Spotify. And leave a rating, guys. I read every single one of them. I am waiting for your reviews. Have a great trading day, guys, and see you all once again tomorrow at Sensex Expiry.